This week in the cryptocurrency market brought a wave of volatility, uncertainty, and cautious optimism. After a relatively quiet previous week, trading activity picked up significantly, especially around midweek, as several macroeconomic factors began influencing market sentiment. The total global cryptocurrency market capitalization hovered around the $2.6 trillion mark, reflecting both resilience and hesitation among investors. While some tokens showed strong upward momentum, others lagged behind due to weak volume or negative news cycles. The overall sentiment was a mix of hope and caution, with analysts pointing to both bullish indicators and red flags on the horizon. Regulatory headlines, ETF developments, and shifting institutional interest played a significant role in guiding market movement. Bitcoin, the flagship cryptocurrency, had a dramatic week. It began with strong upward momentum, briefly crossing the highly anticipated $70,000 resistance level. This bullish surge was largely driven by institutional inflows, increased retail interest, and a flurry of positive news around Bitcoin ETFs. However, the gains were short-lived. By midweek, Bitcoin faced selling pressure due to global inflation reports and speculation about future interest rate hikes by the Federal Reserve. The price retraced to around $6,700, where it found short-term support. On-chain metrics indicated that long-term holders continued to accumulate, and whale activity remained strong. Despite the correction, market analysts maintained a positive outlook for Bitcoin in the coming weeks, provided macroeconomic conditions remain stable. Ethereum followed a similar pattern to Bitcoin but displayed its own unique strengths. After reaching a weekly high above $3,800, Ethereum faced selling pressure and dipped to around $3,600. However, unlike Bitcoin, Ethereum's narrative is increasingly supported by its growing utility. The ecosystem continues to evolve, with progress on Ethereum 2.0, Layer 2 scalability solutions, and renewed developer interest. Ethereum staking remained a hot topic, as more ETH continued to be locked into the network, reducing circulating supply and adding upward pressure in the long run. Rumors and expectations surrounding the approval of an Ethereum ETF further fueled long-term bullish sentiment. While the price faced resistance, the fundamentals painted a promising picture for Ethereum's future. Altcoins showed a mixed but increasingly interesting performance this week. Solana stood out from the crowd, managing to break past the $160 level as investor interest grew due to faster transaction speeds and lower gas fees compared to Ethereum. Solana's DeFi and NFT ecosystems have also seen a steady rise in activity, adding to its appeal. In contrast, Cardano remained relatively flat, struggling to hold its position around 0.44, despite recent updates to its smart contract capabilities. Avalanche, Chainlink, and Polygon also showed mild gains, primarily driven by partnerships and ecosystem news. However, many smaller altcoins remain stagnant, awaiting clearer market direction. For now, only high-utility or well-marketed altcoins seem to be attracting consistent trading volume. The Memecoin sector had its moments of hype but lacked strong follow-through. Dogecoin and Shiba Inu saw temporary price increases, fueled largely by social media trends, influencer tweets, and speculative buzz. However, the gains were minimal and failed to sustain without solid fundamental backing. Coins like Pepe, Floki, and Bonk experienced brief rallies, but were quickly sold off as traders cashed in on short-term profits. The lack of real-world use cases and developer updates in this space continues to be a concern. Many traders are now shifting away from meme coins, preferring tokens that offer real value or strong community-driven projects. Still, meme coins remain a volatile but attention-grabbing segment of the crypto market. One of the biggest themes this week was the growing interest from institutional investors. Hedge funds and traditional financial firms continued exploring digital assets, with some increasing their crypto exposure as a hedge against inflation. News also surfaced about several multinational banks experimenting with blockchain-based payment systems, which boosted market morale. Meanwhile, regulatory discussions picked up pace across Europe, the United States, and parts of Asia. While some proposed policies sparked fear, others indicated a path toward clearer legal frameworks, a much-needed shift that could invite more serious capital into the crypto space. These developments made it clear that, despite price fluctuations, the crypto industry is evolving fast on both technological and financial fronts. Looking ahead, traders and investors are keeping a close watch on several key events. The upcoming Federal Reserve meeting and any changes to interest rates could have a major impact on crypto prices.